All right. What is going on, everybody? Happy Friday. This is your Fiesta Friday show. Roy is just running a little bit late, but he will join us in about 5 to 10 minutes. But I saw this comment specifically, and I didn't want to keep you guys waiting for that entire time, nor did I want to reschedule this. So I'm just going to yap away for about 10 minutes or so until Roy gets here, and then we're going to jump into our key topics. But this week is a big week. We had all the major tech earnings. We had the Magnificent Seven. We had SoFi reporting this week. And we're going to keep the streak going because next week we also have some big company earnings as well. But welcome, everybody. Good to see you. Yeah, I think Roy's wife wanted to get food or something, and he drove her like a good husband that he is. And of course, as a result, I am now doing a solo intro. I want to just I want to very quickly walk you guys through the earnings calendar for next week, and then Roy and I are probably going to talk about this at some point or another. I also want to talk about this over a couple of videos that I'm planning. All right. So here's what we have coming up next week, guys. We have Palantir on Monday. They're reporting after the bell. Of course, we have the one and only Berkshire Hathaway before the open. I think this is the first quarter without Warren Buffett at the helm. We have Duolingo after the close as well as Grab. These are retail names, essentially. I know Amit's big into Grab. Duolingo has totally been crushed, but I still know a bunch of people that are in Duolingo. So it's going to be interesting to see how they perform. And then before open on Tuesday, we have Shopify, we have PayPal, we have Fiserv, and is there anything else that I'm interested in here? Not really. AMD after the close, SMCI after the close. We have MicroStrategy reporting on Tuesday after hours. And then on Wednesday, we have Disney before open. Uber. I saw this thing this week around Uber getting into the hotel space. Maybe when Roy's here, we can chat about that as well. But yeah, AMD is going to be a huge one. All that matters next week is AMD. If Lisa Su kills it, the AI narrative will go supercharge mode until NVIDIA earnings. Yeah, NVIDIA is the week after this, but we also have Iron and CoreWeave reporting on Thursday. We did also get news around NBIS's earnings being on May 13th. So not this upcoming Wednesday, but the following Wednesday. And that's going to be before the market open. And I'm, of course, going to be live streaming that earnings. So definitely tune into the channel for NBIS bright and early next week. But next Thursday after the close should give us a pretty good indication on the overall demand and how it's essentially evolving in 2026. We did get Anthropic's earnings, 44 billion in Anthropic. I'm going to throw up the chart in just a second, but 44 billion in Anthropic, up from 30 billion. And this is like month over month. The demand story is only getting stronger. It is definitely not a bubble. And that was signified in a lot of the CapEx that we saw this week. And I know Meta sold off on CapEx as well this week, which is, in my opinion, entirely unjustified. I am, of course, a Meta shareholder. And so when we see Iron and CoreWeave report earnings after the bell on Thursday, it should give us the other side of that story on the data center side of things. So these are the two that I'm the most interested in personally, because NBIS is my number one position, and this should give us an indication of what is to come on the following week. ARM, IonQ, Dutch Bros. I'm not sure if Matt is still in Dutch Bros, but that's an interesting one. Celsius before the open. I'm drinking an Alani New. And I believe Celsius owns that company. They acquired them. Yeah, it's going to be a big week. Enbridge on Friday, but I think Roy and the gang are going to be streaming Palantir on Monday. And then probably Tanner is going to be streaming Shopify and or AMD, probably both, honestly. So yeah, we'll see what happens. I don't plan on streaming any of these earnings, quite frankly. It doesn't work well with my office schedule, unfortunately. Oh, we also have Rocket Lab next Thursday after the bell. That's going to be an interesting one as well, especially considering all the hype that we're seeing right now around SpaceX IPO, which is going to be upcoming in June. I believe the date is still. So, Rocket Lab is going to be another one to look out for. Yeah, let me know what you guys are thinking for earnings next week. And then I also did want to show you guys this, the Anthropic revenue profile, because that's absolutely staggering. This is stuff that I wanted to talk with Roy about, but I'm sure I'll rehash it once he gets here. So this is something that Tanner posted, and this is just the plotted out ARR growth of Anthropic. And we got essentially a leak today that Anthropic was at $44 billion in annual recurring revenue. Okay. This is up from the $30 billion that they were at in May. And quite frankly, we're going to talk about the NBIS acquisition that they had today. But I think that this right here is more of a reason why NBIS was up so much, more so than the acquisition. The acquisition does help them and it's good for the long term thesis. And we'll talk about that. I'm going to make a full video around that. But this right here, not only from the ClickHouse point of view, because ClickHouse, of course, works with Anthropic directly, but also from the demand profile point of view, is really validation for the data center story maintaining that growth rate. And so this is one of the reasons why Iron and CoreWeave on Thursday are going to be big earnings for me personally, because the CapEx story is evolving, and we're seeing that, in fact, these Magnificent Seven companies are not reducing their CapEx. It wasn't as though there was going to be a lot of upfront investment and now the CapEx is going to reduce. They're continuing to put more and more into CapEx. And a lot of that is reflected in Anthropic's numbers. Of course, Anthropic is now at $1 trillion valuation if and when, more realistically, they want to go public. So that's going to be a big story for NBIS as well. I'm just waiting personally for the Anthropic partnership to drop with NBIS, to have NBIS drop a press release that they're actually servicing Anthropic. That would send the stock straight up higher than $200. Even Amazon, quite frankly, would do the job. But yeah, I think the biggest thing I'm expecting for NBIS is for them to raise their 7 to 9 billion ARR guidance, because that's just, the writing is on the wall, and everything that we're seeing around points to that narrative as well. NBIS, of course, was up around 10% today, and earnings are on the 13th. So yeah, it's going to be an interesting. It's going to be an interesting next couple of weeks for the data center story in general. Sir Charles says, when are you boys going to grow up and quit your jobs like Steve and just create content full time? I don't miss any of your content. Amit does market open, Steve does midday, Tanner early afternoon, and then Amit does market close again. And yeah, I think I think I'm at a different life stage than Steve is, quite frankly. Steve, I think his last day of work was officially today, so I have to congratulate him. I saw his video earlier today that he finally announced that he was quitting. So yeah, super happy. His growth has been tremendous, and especially all the work that he puts in with the articles and everything. Like the guy, I talked to him the other day on the phone, and I was like, "Congrats, man! Like you're full-time content creator now." And he's like, "I'm gonna work harder than at my actual job as a content creator." So he's committing to do like 1 article a day and 2 live streams a day and 1 recorded video a day. And it's just like that dude's going to get to 100K before anybody. So yeah, very, very exciting stuff. The plan is still for me to do it, but yeah. Go fuck yourself, Charles, because I'm only 31. Yeah, so this is what I mean by different life stage. I'm not thinking about quitting my career just yet, but eventually that's the direction that we're trending in. Okay, Roy's here, so we can cut the awkward pep talk from you guys.
Sorry. Sorry to you. Sorry to the audience. But I'm here. Good intro. I caught all but like the last 5 minutes. So if you're saying mean things about me, that was the right time. So,
I would never.
yeah, the meta. I heard you talk about meta, and of course the sell off that happened after that. It was one of those that, if you go back last Friday, we talked about expectations going into the hyperscaler earnings and which one might outperform. Of course, Nvidia is going a little bit later. Mine was Nvidia, but I liked your thesis on Meta. We saw the opposite. And do you think it was anything except for CapEx, or do you think it was just all CapEx was the reason why it sold off?
I think capex was definitely a big reason. I also think with like I saw some bear cases around Meta and their business being dependent on ads and so many SMBs being displaced by AI could definitely point someone to say, hey, Meta is going to get disproportionately hurt because of AI. And now, yes, they have their own AI models and their family of models that they're rolling out. And they did mention that they want to lean more in the app space, and lean heavier on AI specifically. I'm sure they're going to get ROI on their spend. They're going to have higher monetization, more targeted ads. But I also understand the other side of it to say, well, look, these guys are working predominantly with SMBs, and SMBs are getting disrupted left and right because they're, SaaS businesses that are advertising. I think it's still a good risk reward profile though for Meta at 600. And I don't know, man. I remain bullish on Meta personally. I didn't like the fact that their users plateaued. That could have also been one of the reasons, Roy, why the stock took a sell off, because they said, hey, look, it's kind of like extenuating circumstances that the user base plateaued due to some macro geopolitical stuff. Sure. But I mean, the marketer is forward looking, right? And they don't like when the numbers turn around.
This before with Meta, although it's not as it was back in the previous cycle where against Meta's strategy as it related to CapEx. Now, this time I think it's different. I think it's actually very unjustified. And you know me, I'm not a Meta fan. I think it's a great company, great CEO, would never invest it, rooting against him. So, but I think the sell-off is fine. It's mostly like you could if you this reason didn't exist, people well this reason and that reason, and there's a little bit of truth, but like 90% of it is just capex, and we've seen this previous quarters as well. And this time, I think Meta was had the biggest expansion. Of course, the way that they are also raising is interesting, but unlike Google, which is also expanding, I think by $10 billion are capex. Both the high and low end were moved up. They, through their Google Cloud, demonstrated tremendous ROI versus what Meta's building. It hasn't yet. It's just a little bit further behind. So I think really until they prove that this ROI is actually going to be there, and not just say that it will be, not just guide for it, but actually see it, the market might continue to have this reaction as it relates to especially any new CapEx raise or increase.
Yeah. Now, Roy, please don't look at the comments. We're going to play a game, okay? Because I guarantee you haven't seen this news yet because you've been out all day doing real life things. eBay is up 15% after hours. Have you seen this?
I saw your message to me, yeah. GameStop.
GameStop is looking to submit an offer for eBay. Now, can you please, because you have a PhD, you're a smart guy, you know math. Can you explain to me how an $11 billion company is trying to buy a $46 billion company?
Dilution. Insane dilution. And yeah, I mean, like, it is what it is. Those that have held GameStop are kind of used to it. I don't know that at this stage, I mean, it is up. I don't know that they would be expecting this or excited about this. eBay has been doing well as a business, which has actually been frankly surprising. I used to use eBay all the time at a business that actually ran, and a lot of the revenue came from eBay. This is more than a decade ago. But yeah, it's always strange when you see it, but it can happen through a merger, through an acquisition that's using a ton of shares. And I would have to look and see what the total authorized limit is, but I think it's quite high for GameStop. So
Yeah.
it's not the worst idea for partnership. It wouldn't surprise me too, like if they're like, hey, let's acquire Venmo. Seems like it's for sale. So
This was not on my bingo card. This was one of those pieces of news where I was like, wait a minute, what? Like, GameStop? What year is this? I was expecting eBay to be bought out, but definitely not by GameStop. It wasn't even going to be in my top 10 list of candidates who could be, buying eBay. I could have seen a PayPal, quite frankly, or someone larger, let's say, someone that could actually afford buying eBay.
yeah, it was a long time ago, but I think 5 or 6 years ago, people were actually talking about the PayPal buying eBay.
Yeah,
The market cap was a lot bigger then, so
yeah,
but yeah, it's funny because PayPal came out of eBay, of course. So
yeah, exactly, and they can just reconsolidate again.
mhm.
Uh, yeah, people are commenting that you're like you cut in and out. What is it with Texas internet, man?
It's the Texas power grid. I don't know why, but they're like, hey, it's fine. You're not in a place that gets really severe storms, hail, or hurricanes. We're in Houston, so it's sarcasm. Let's have really terrible power lines and just have them go out even when there's just like a strong breeze. I don't know. I don't get it. It's frustrating. They have ever since Hurricane Beryl came in and took out our power for like 4 days, and some people were without it for over a week. And it was not even really that bad of a storm. I wasn't good, but they've hardened a few things. But I have no idea why we have a power grid that seems like it's a third world country. So, yeah.
Yeah, let me. Wait, what are we talking about? While you get that list together, let me try to bookmark some of these questions.
Well, you've already talked about the hyperscaling earnings, which I think is well, at least I've heard a lot more on Meta. Beyond that, so Apple came in, of course, yesterday. But any other surprises or standouts to you? With
Google.
Amazon, with Google. Okay,
Dude, Google's numbers looked bananas. Amazon was great as well. Like all of them, they all beat. And like, to me, the main question that I asked myself was like, what would have happened to these companies if they didn't beat? But most of them sold off. Google didn't. Look at this. Google Cloud backlog. All right. Q2 2025, 108 billion. In Q3, it jumped to 155, 240, 460. Like, what if I was cooking the books, I couldn't make it look this parabolic.
yeah, for sure. There was actually a really interesting that looked at a post that Fiscal AI did. I'm sure I could pull it up too, on the backlog specifically just from the clouds. Yeah. Okay, here it is. This is crazy. So you can not just see what's happening with Google, which is the most impressive, certainly, and it is off of a smaller level. I mean, look at this. AWS, Azure, and Google Cloud. It's growing nicely back here, and the last 2 quarters are parabolic. So what does that signal to you, Tevis?
Yeah, I think the demand story is very much intact. I don't think we're in a bubble at all. And I think this has legs to go much higher, and it will go much higher. I was on the phone with Tanner earlier today, and he's like, dude, I want to go so much heavier into AI and memory and just AI infrastructure in general. And I think most of it from Tanner's point of view was off the back of Google's tremendous backlog. Interestingly, in this chart, Roy, Microsoft flat.
Yeah. And this is backlog specifically. Do you think that that's related to OpenAI churning off? That there was an announcement that they're basically actually able to offer their services on other clouds as well. And that there's a partnership right after that, I believe, for Amazon. Correct me if I'm wrong. AWS.
Yep, exactly.
So yeah, I think that that's mostly what that is. That's something to keep an eye on, of course. Like if quarter two is the exact same, flat or down. I mean, and it could be. The I don't think it's a concern because I mean you can see that the demand is there and they'll be fine. Of course, they're a much larger base as well. They had their acceleration earlier. Thank you. Yeah, I appreciate that. Yeah, no, I agree with Tanner. Like it's hard to look at this and say bubble. That's not what these numbers indicate. CapEx, if you're looking at that alone, and you're like, yeah, maybe it's a bubble, and they're just built in like this delivers ROI right here, and this is a significant reason for the capital expenditures. On one of them, I believe it was Google. They mentioned that I believe 60% of the increase for CapEx was related to what's happening with cloud, and 40% is on the data center side. I might have those flipped, but a large amount is cloud, and this is only just like inference, and we're going to talk NBIS here in just a second. Cloud and the demand for that, for data centers and inference as well, is still underappreciated. And the more and the cheaper that AI gets, and there's some news there with NBIS as well in that acquisition today. It's like this is a banger of a week.
It is.
The more that people will use it, the more it'll be disruptive, the more use cases that actually become really viable, the more it gets further developed, the more demand again for cloud, for data centers, for any kind of inference that you can get, but especially what NBIS has as well. So it's one of those things where I have some cash from Air Test Systems, and some of it I did put into Wix, but I also have some cash just sitting there, and also still some underwater and then some not quite underwater air as well. If that sells out, I'm probably going to put all of that back into what's happening here. Now, I have to figure out where I want to put it back into, and there's a number of names, some that I own, some that I don't. It might just be more NBIS. I'd like it to go down a little bit before then, but this is not a bubble. It's not a bubble. There's tremendous acceleration, and that forward amount that is needed there is underappreciated. It's why, I mean, like, okay, one other thing. The CEOs that run the Mag 7 are not idiots. I know that there might be some that people don't like or politically whatever. They're where they are for a reason, and they are well aware that when they say CapEx project, that the market is going to have the reaction like they did with Meta. Yeah. But they are basically left, and every single one of them said this, that they have no choice except for Apple because they've chosen not to participate except for building out this capacity because the demand is so immense. The ROI is so incredible, and they don't want to miss this next wave no matter what. They see what's coming better than probably anybody else out there except for maybe like TSMC. And that guy and that company, which is very conservative, is doing the exact same thing, building an immense amount of CapEx, and they're usually very cautious. It's very telling. So yeah, I'm going to keep that percentage and maybe even increase a percentage that's allocated towards this specifically.
Yeah, absolutely. And right now, I feel the market is very much in limbo with these emotional swings where if you raise CapEx, I'll sell you off. If you lower CapEx, I'll sell you off. If like you do nothing with CapEx, I'll sell you off. Like any mention of CapEx, I'll sell you off. They don't know what the hell is going on. And you know what? We're actually starting to see the first inklings of ROI reflecting in the financials. And this is something that we talked about, Roy, around what we can expect for earnings coming out. And we saw them all crush their numbers. All of them. Microsoft, Google, Amazon, Meta. I didn't see Apple, quite frankly. But the rest of those four, they all crushed their numbers. And yet most of them were sold off. Right? So I think one part of me is like, okay, what am I missing here? Am I missing something? And then the other part of me makes me want to concentrate so much more heavily onto the AI space in general. And I literally asked myself, I sat down and I asked myself, why am I invested in anything that's not AI right now? Because the growth rates are not comparable at all. Like, why is 30% of my portfolio into SoFi, as an example, when Google's backlog is like doubling every single quarter? My point, like it's an oversimplified point, but the idea is that having a heavier concentration in AI is not a bad thing if, in fact, this bubble talk is just complete, BS. So I don't know. It made me really much more bullish on the sustained longevity of this AI wave and to truly believe that we are in the early innings. I mean, Dan Ives said this is the third inning for Nebius, and I think it's a third inning just for AI in general, and maybe even earlier than that. So
Yeah.
we'll see.
Yeah, and speaking with that, like one thing I'll push back on it, like SoFi is growing over 40% year over year, so it's not just in one area, but all areas. So there is growth that's happening elsewhere too. But this is, of course, one that is in the intersection there, and it's one that you thankfully pounded the table on long enough that I was like, yeah, I really should think about getting back in. About the same time as the price fell, and I ended up buying it at like $80 or something. So Nebius with another announcement, really good performing day two for the stock, up 10%. Agrees to acquire EIGen AI, or I might be saying that wrong, strengthening Nebius Token Factory as a frontier inference platform. And it's a deal that's 643 million, including cash and also Class A shares, which if you're buying Nebius and you don't expect dilution, then you are in the wrong stock. But this reading over it and what they plan for it to actually do is really compelling. I want you to talk about this because you know Nebius better than I do. But Token Factory is one of those pieces of Nebius that is incredibly compelling. So CoreWeave, and I don't think this is wrong to do, but CoreWeave is very focused on just the bare metal inference that they're designing, and there's a demand for that. But what Nebius is building, and Iran kind of, and there's a few other minor ones that are kind of doing this as well. But frankly, Nebius is the best of class easily, and it continues to get better from deals like this. Is a neocloud, and so basically, it's not just the compute that you're paying for, but everything else that it can provide. And Token Factory specifically is that efficiency lever, and this sounds like it's going to help. Of course, customers onboard faster with Nebius, but also that their efficiency will continue to be even more efficient. So really, really bullish. I like the acquisition. I want them to continue to build out that neocloud, and a lot of it is going to come through acquisitions. What were your thoughts, Tevis?
Yeah, look, they have been in partnership for several months now, and EIGen mentioned in their press release that this is something that is synergistic and makes sense for both parties. And quite like they have like the acquisition amount was not high in my mind for what they get out of it. 643 million in cash and Class A shares is kind of a drop in the bucket when you think about what they're unlocking in terms of inference and in terms of the token factory. Let me share this. This was one of the co-founders of Nebius. This is your chief business officer, and he said, "Look, that's how we made a decision to acquire EIGen Labs. Kidding, but not actually kidding." And this shows the output speed of measured in tokens per second. And as you can see, they're number one. This is Jensen here talking at GDC around the tokens per second. Look at who's number three, Roy.
Yeah.
And Nebius has other models, of course, down here. And but the idea is now think of these two together, what that does. And if you go back to Arkadi's comments around Nebius being this fully end-to-end solution that plays in all of the layer cake, as Jensen laid it out, not just bare metal, but also token factory and inference, and also optimizing the tokens per with regards to the output speed and not only the speed, but just the efficiency in the world, building this artificial efficient intelligence, the fastest inference in the world, that is going to pay dividends down the lines, because you're going to go to Nebius for one thing, and then you're going to find yourself cross-selling into all their other parts of their offering. You might start to, you might discover them today for their bare metal, for a hardware play, but you might stay for the software.
Yeah, and that's the thing is eventually the insatiable demand, and the hyperscalers will build out some of their own capacity too. It'll take time, is going to tell off, and I think that's not when CoreWeave goes to zero by any means, but I think that that's where CoreWeave's rampant growth and the relentless demand there goes down. But while I think Nebius is going to be a stickier product, but they really need to start using the term tokenomics. That's not been used. At least I've not seen them use it yet. It's usually sometimes a fintech thing, but tokenomics. They need to be all over that.
Let me show you something here. So this is Daniel. He recently interviewed Roman this week, which was kind of interesting to see as a Nebius investor. So this chart here, it measures all of the providers, and the x-axis is price USD per 1 million tokens, and the y-axis is output speed, so tokens per second. And you can see where these guys sit, not only in the most attractive quadrant, but they're actually the fastest for the price offering, faster than Amazon, Google, and they're among the cheapest as well. And so Daniel says here, look, if you're going to go into this capacity constrained phase of the AI cycle, efficiency is the main driver of growth and profitability if capacity is the main constraint. And as we're seeing, and as we have been seeing over the past several months, capacity has been the main constraint. Nebius is backlogged for a long time, and they can't build fast enough. And so if they can now have output be more efficient on the software side of things, then that's going to help their business exceed all of their competitors.
Yeah, it helps them in multiple ways, which is just this. I was very excited for this when they acquired Tavili. I was like, it's good, it's nice. This one I'm like, oh man, because I remembered that was from GTC, right? The Jensen slide. I remembered them. I was like, these guys are great. Like the price you mentioned it, like it's a price. It's like I don't know how to value that type of company, but I would have expected a deal in the billions, like maybe 1 or 2 billion. And it still would have been exciting to me. So 643 million. Yes. Sign me up for that. I'm even more excited to hold Nebius. And so I hope, and it's volatile enough. I think it'll give me a chance because we saw a lot of pullback earlier this week too in Nebius. But I hope I get to stop rolling out my covered calls, and I'd also like to add more as well. Put this up to 10% in my portfolio.
Yep. Yeah, I'm going to do a video on this at some point or another, and it's going to get like 5 views because it's a Nebius video, but still going to do it. Still going to shout from the rooftops for this company, and we'll see how many people actually end up listening.
Yeah, absolutely. We had one other topic before we get in the Q&A period, and we can talk Palantir too, if there might be some questions on it, but maybe I can mention a couple of things on that too. Do you want me to talk about Palantir right quick first with the earnings preview, or would you rather talk about your AI workspace thing?
Yeah. I mean, you can talk about Palantir. I'm not sure if you're covering the earnings live on Monday after the bell.
I probably can't. If that changes, I'll see if I can join and jump on Amit's stream. I know that he's covering it live, or I'm sure that he's covering it live. So, okay. So what is insane is this right here. So we look at estimates, and we're going to look, of course, what analysts are saying in terms of estimates on a quarterly time frame. Quarterly, there we go. And it's 1.42 billion. And the really crazy thing, Tevis, let me zoom that in a little bit, is that's 75% year-over-year growth. And I think that they're light. My prediction is that they actually come north of 80% revenue. And there's a lot of reasons why. I've got a video that's actually coming out that'll detail all those reasons. But like the bottom line is they've landed like multiple billion with a B dollar deals over the last 2 quarters. So a lot of them fell in quarter 1, but quarter 4, significant expansion. Their international is beginning to reaccelerate. The last 2 quarters has actually been pretty decent, really quite nice in the UK. I think this quarter we'll see more acceleration. Next quarter we'll see a significant amount based on the announced contracts that they've landed. And so, yeah, this is a very pricey stock, but it's not like when if you're looking at it like a normal stock, it's like, yeah, they're growing well, they're growing 30% year over year. They'd be quite expensive, and I wouldn't even be DCAing at that point. They grew 70% year over year last quarter. Analysts expect 75. I think it'll come close to 80. And the crazy thing is not just that, but with guidance and all the things that they've landed in quarter one, with Maven becoming a system of record as well, like it's shocking. So I don't know that they do this, but I think there's a chance that they actually put in 100% year over year growth the following quarter. I don't think they'll guide for that, but I think that they'll raise guidance to maybe 80, 85%, which is just crazy.
Yeah. We'll see. The thing with Palantir is the first quarter that they don't put up accelerating growth, I think the stock is going to get punished in the short term for it. But the numbers have so far been incredibly impressive. And going to be watching from the sidelines to see how that's perceived this time around. Because I don't know, man. It seems as though with the earnings that we saw this week, many names are like the market feels skittish. It feels a little bit hesitant, anxious, that almost as though many names are priced to perfection, even though we haven't really had a big rally upwards where names will sell off despite tremendous earnings. And I don't know if that's going to continue with smaller market cap companies, or whether that was mainly the repositioning essentially for the Magnificent Seven companies. So we'll see what Palantir does relative to their earnings, and smaller companies are all reporting next week as well. Thank you, Highland, very much for the 5 subs. Congrats to people who did get a membership, and welcome.
Yeah, if you can throw up Jake's comment there. So as Palantir a buy at this level, I opened it a position at 120. I've just sat since, not added. For me, it's a slow DCA, mostly because I don't have the amount of position that I'd actually like to have. More sadly got away through covered calls than I wanted. But it's not a rapid DCA. If we fell, and it would still look expensive from a multiple standpoint. And I don't expect this to happen, but if we fell to $100 or lower, I think there is a place for me personally to add more aggressively. Still looks expensive. I think it's an opportunity. And if it ever fell to Michael Burry's level of like $40, I would probably just own Palantir.
Well, you might eat your hat on that one, because if it fell to $40, there's probably a big fundamental reason for it falling to $40. And then,
that's fair.
Like they're cooking the books or something, and it fell to $40, and I'll be like, well, sorry, Roy, you got to go all in now, buddy. You said so.
Yeah. Okay. Yeah. What I mean is that there's nothing crazy like that. Like Palantir launches a coup to take over Albania or something. It's like, well, okay, I didn't know they had a military, but okay, that's not good. I'm out.
Yeah.
Wouldn't be buying that, but yeah.
All right, let's move on to. I'm so bad at making timestamps, man. I'm doing them 20 minutes late for every topic. But let's move over to the next topic. See, I gotta get a haircut or something. I gotta stop having these bright lights, man. I honestly gotta go with like warm lights, because I genuinely think it's the lights. And these guys, it's Canada, guys. It's gloomy out. I didn't see sunlight for a while, and I was down in Argentina for a month, and it was like the best time. And this country is crazy.
Yeah. All right. So tell us about AI disruption and what you're seeing personally. Any shifts in view on that as well, because you have an anecdote.
Yeah. So I messaged Roy earlier today, and so what happened this week is, without giving too much away for like company specific stuff, one of the members on my team started messing around with Claude design. Now, I haven't tried it myself yet. I will this weekend though, and then maybe I'll start reopening the folder on Paper Panda, because I haven't touched it in like a month and a half. So we'll see. But anyways, this person on my team, Roy, tried Claude design, And I had him record a Loom video, which I then circulated internally in the company, because what this guy did was he basically put all of the product requirements we had for some upcoming feature that we want to build into Claude Design. And the result was a fully working prototype, start to finish, that was entirely dynamic per our brand guidelines, uh, with design best practices in mind. And the output was code, actual, JavaScript, HTML files. And there was a one-click button that said, hey, do you want to hand this off to Claude Code? For Claude Code to essentially build everything. And I asked him, I said, look, how long did this take? And he said it took about 4 hours of him like tweaking stuff. If this was a design flow, it would have taken maybe 3-4 days, maybe more, honestly, of designers actually making the Figma screens and then creating the prototype and then communicating the prototype and making sure everything in the requirements is in the screens, and then handing them off. And they would be handing off Figma files. And then this is just like, it cut all of those steps. It was working, and you could hand it off to Claude Code in one click. And I said, look, we gotta revamp a whole bunch of internal components based on this, because this is the direction that I want to move the team in. Everybody needs to make their own prototypes on Claude Design, and you can just hand it off to the devs. Claude is going to change the game, man. And I know I was just like, oh, well, and we do use Figma Make right now. So Figma's AI product. But Claude Design is just so much more efficient because it integrates with Claude Code as well, which is the number one, coding tool right now. And this is where I'm getting to, Frenzy. I told Roy in the DMs, I was like, dude, I was bullish on Figma because I think that they're leaning into AI, which is going to benefit them. However, I don't have that stance anymore. I think Figma is not in the driver's seat. I think they're going to be struggling to catch up. And even if they do catch up, then Claude is going to be one step ahead, because one interesting piece here, Roy, is that you're building an ecosystem with Claude. Okay. Claude Code is the foundational layer of how you ship products across the board. Even Apple today, I don't know if you saw this news, but even Apple leaked a Claude MD file in their latest release, and they hotfixed it. They patched it up immediately. But even Apple is using Claude for shipping. Everybody is using Claude Code. But now
I like how you're saying even Apple. It's like, yeah, even these idiots. No, just kidding.
Well, no, I mean, even the biggest companies in the world are using Claude Code. Now, think about that as a foundational layer. What you have then is you have all of these components that are built on top of this foundational layer, which then create network effects. Claude Design, one-click handoff to Claude Code. In a month from now or 3 months from now, Claude Cybersecurity, one-click handoff. Claude Database Infrastructure Services, so on and so forth. And so as people use Claude Code, it's going to be so much easier for them to use all of the other services in the Claude ecosystem, as opposed to going over to Figma and trying to integrate Figma with Claude Code, and trying to integrate Railway with Claude Code, and trying to integrate, AWS with Claude Code. Claude could just do all of it. And so I think that is what ultimately changed my opinion on Figma. And I think Claude is going to absolutely eat a lot of companies' lunch, not just in the SaaS space, but also in the product development, design, and engineering space in general.
Yeah, it's the level of disruption is just absolutely incredible what they've been able to put out. Is there a price that you would ever touch Figma?
I'm sure there is. I don't know that they're going to zero. They're not like a company.
Yeah.
they're not like a company that refusing to adopt AI. They are adopting AI and they're moving as fast as they can with AI. But you're literally competing with a company that is creating the AI. You get what I'm
Yeah.
saying?
Yeah.
It's like a wholesaler versus a retailer type of conversation. You're never going to get the margins that the wholesaler gets because they're the wholesaler.
Yeah.
So
Yeah, it's interesting how quickly like that space has just evolved in the last few months. Because 3 months ago we are talking with Steve, and even as much as you and I saw disruption, we didn't quite see it to this level. And of course, Steve has moved from his not being disrupted to Claude is coming. So uh,
absolutely.
amazing.
Yeah. I think the thing that clicked for me was this network effect that you have when you bundle everything in the ecosystem. It's the same reason why Apple is so powerful with staying power is because once you have one product and you get a second, they have interoperability across each other that it builds the walls up higher in that walled garden. And I think that network effect is also the reason why Claude Code can be seen as a foundational layer in a suite of different offerings and services that they will later provide and build on top. Because if they make Claude design so easy to use, where it's literally one click and one agent hands off the files to the other agent who builds them, that ease of use, that convenience is going to be an insurmountable barrier for all of these other companies that live outside of that ecosystem. And I don't think many people are thinking about it this way, but Claude Code has been so pervasive in completely taking over the cultural zeitgeist that it has formed its own ecosystem, whether we like it or not. And everything that they build on top is just Lego blocks.
I know that OpenAI has released their own product, and of course, there was a report that came out this week about them being behind their expectations as of the end of December. Of course, that's what caused the early sell-off. I think it was Monday and Tuesday, and Wednesday as well, but until the hyperscales, mostly not Wednesday. I know that they have since released some products, I think, to probably help better compete with Claude, especially in the coding side, because they had basically, I wouldn't say they fully capitulated it to Claude, but I mean, that's how Claude had been building from the very beginning, or Anthropic was designing it with that in mind.
Yeah.
Do you see this as a winner take most with Claude Code, or do you think that there's some catch up possible with the other models?
So it's interesting because I imagine the commoditization is larger on the pure LLM side. So the chat based LLM side. If I go to Gemini versus ChatGPT versus Claude, I can use them interchangeably, but I don't see that to be the case for Cursor and Claude Code. And I think because Claude Code came first as something that's like good enough to have the end-to-end suite. Like there was, the Lovables and Bolt and all of these Windsurf, all of these ones, but they were mostly like fun toys. They were flashy tools. Claude Code was the thing that said, "Hey, we can do everything end to end that you want. You can build whatever you want." And Cursor now has most of that functionality, if not all of it. It might, in a perfect world, be a very clean competitor, but the problem is, I already set everything up on Claude Code, and it does
Yeah.
everything that I need. What is the incentive for me to go try something else, right? So what I'm trying to say is the barrier was larger on the chatbot, the chat, back and forth side of things because the progress gaps were wider. If new ChatGPT 4.0 launched or whatever, you wanted to go try that because you actually got higher quality answers that you could see in real time. You could see that it was better. I don't know that people are doing that with the code side of things. And I would imagine that Claude Code is the only reason, not the main reason, the only reason Anthropic has surpassed OpenAI.
Yeah, I think that's fair. And then I think it's for most of the companies that are out there, there are some that are hurt a little bit more if, or that are not helped as much if Anthropic wins. and OpenAI falls behind, but I don't think any of them are positioned so badly that they'll collapse or anything like that. Even Microsoft, who's maybe the most exposed. Anything else that you want to touch on before we hit Q&A? I see a lot of good questions.
No, we can hit Q&A. That's fine.
All right.
Well, let me ask you this, actually. Let me start off Q&A. From what you saw in the Mag 5 earnings, did it make you want to buy any of them?
Out of those five, I was going to say NVIDIA.
They didn't report.
No, I know. Yeah. They're part of the Mag 7, and that earnings, I know internally they're using a lot of things as well. But, I mean, I can't buy Meta, so that one's out. Microsoft, even though, Microsoft probably had the worst quarter out of the ones that reported. I didn't look at Apple too closely, so maybe I should do that, but not too interested in Apple. You didn't see the growth in Azure, and that may have just been as simple as OpenAI beginning to pivot off on that. Or there could be some other issues as well. That one has a bit of a SaaS overhang, but if you're looking at the multiples, it goes back to your thesis of when one of them is down and out of favor, that's a great time to pivot into that name, with a certain amount of money. I think Microsoft is still there, and it's very compelling. And they're positioned very well. So I don't see them, being out of like the top 10 highest market caps like in 10 years out. I just don't. Google, likewise, I wouldn't buy it here. I would wait for a pullback. But I mean, I've shifted my views on Google. A year and a half ago, I was like talking about search being disrupted faster than how they could iterate Gemini. Gemini's gotten a lot better. I don't think it's best of class right now, but they keep leapfrogging each other. But it's well integrated across that ecosystem. And the cloud itself is growing immensely. It's not going to do that every quarter. But I also like the way that they're raising capital at this point, or that they're using their capital versus having to do equity raises like two of the other names. So I like Amazon, but it's one of those where I don't know if this will ever change with Amazon. It would have to probably go down quite a bit on price. I don't think it's a bad buy here. But if I'm looking at a list of names I'd like to buy, it's never at or near the top. It just isn't. So I would say the one that I moved towards the most was the one that did the worst, but still did great, was Microsoft. What about for you?
Yeah, Google is very impressive. I've slept on Google for a long time, and I'm still going to continue to sleep on Google regardless of the results. I think what Amazon reported is I was very bullish on Amazon, but I think Meta is the most sort of criminal. The fact that it was down 10% on this earnings, I was like, did we listen to the same call, guys? What is going on here?
Yeah, to be fair to Meta, if I was not a hater of that company, that would probably be my answer, just from a pure investment standpoint. But I dislike them enough. I would rather not make money and make money elsewhere than invest in them.
Yeah. All right. Let's now go into Roy hates Meta. Yeah.
Yes.
It's the man has principles. Leave him alone. Let's now go into the questions. All right. We got 27 questions bookmarked here. And we'll see how many we have after we answer a couple of them. Chances are more than 27. Sir Charles asks, ask Roy when he's going to follow Steve and quit his job now that he's a doctor and just stream earnings for us full time. No one said he had to actually use the doctorate.
Yeah, the funny thing is a doctorate is in the field where I work, and I've been asked that question for a while when I would do that, and the answer is I have my dream job, even though it's not the highest paying. I don't need the doctorate, though I am using the doctorate in the field. But I plan to keep doing that until I can't anymore. And so, if they get rid of me, if my wife's like, hey, time to move on, we got to do this, whatever, I'll consider that. But no, I think that I want to stay doing what I'm doing. I love it. I'm good at it. And I think it benefits a lot of people. And I tell people like, this is my hobby. most hobbies cost money, so it's nice that it goes the other way around. So it's not at the point where I would feel comfortable making this switch and just saying, "Hey, I'm going to do this full time." I also think that I'm probably not good enough, and maybe it's me being biased on myself, but I'm afraid that I tend to talk my book. Yeah, it's the names that I follow the most. It's the names I follow
Everybody does.
closest. Yeah, but like, could I and would I be interested enough to like significantly branch out and be much more broad the way that Tanner has done? Like, for instance, and Amit as well. These guys are incredible, incredibly brilliant. I think smarter than I am too. So
I don't
yeah,
think
there is
I don't think that's true. And like, dude, I get it, and I'm sure you'll win brownie points by being humble, but I gotta call BS because I think this job, Roy, and I'd love to get your take on this, but I think this job is more entertainment than it is education. Like there is your
that's fair.
take and your opinion, and I think the more you do it, the more you become a jack of all trades almost because I have just as a byproduct of having done live streams multiple times a week for years now, I have little sound bites of my opinions across every vertical you can ask me. I'll have a sound bite or two. And in many cases, that sound bite or two is enough for some verticals as long as you're an expert in some other ones that you can speak to. And so I don't think there's any special, ability that somebody like Tanner or Amit, and I love them both, would have over you. It's just more repetitions.
Yeah. Well, thanks, Tevis, and thanks, audience. You guys are awesome. But yeah, like the other factor too is when, like, if this was so since I regard it as a hobby, it allows me to do things which I shouldn't have done. Hadn't planned to do this, but like be 15 minutes late because I'm taking my wife to go get some food, or hey, I'm going on vacation. I don't have time to do this. It's not like the highest priority in my life. It is important. If I was doing it full time, and it was my whole focus, my job, I have a hard time keeping that in balance and not just saying, "Hey, I'm going to go 100." I'd take a day off, make sure I'd have a weekend and everything. But yeah, it just there's a lot of factors. So probably won't happen. It could happen at some point, but that's when something happens to my job and or life, and it just pushes me in that direction, which I wouldn't hate, but I love what I'm doing. I love the balance. I'll see if I can keep it up. What about for you, Tevis? Would you ever, or at what point? We've talked about this before, and you're doing quite well too. At what point? And I think you're happy at the company that you're at. But is there a point when you say, "Hey, I've done enough elsewhere. I just want to do this full time," or is it a certain level of subscribers or income or combination?
Yeah, I would say I enjoy this much more than I enjoy my actual job. Maybe because I view this or I've reinforced my mind, let's say, over the years to view this as fun because this has always been something that I choose to do in my free time versus my role is high pressure, high stress, and I don't know, you sort of always have to be on. And this is a side of me that nobody in my job sees, and I hope that they don't. Um, it's very, very, very different from my regular life. But if the money was right and I got paid all things equal, I would do this 10 times out of 10 over my real job. That's not to say I don't like my real job. I enjoy it, but for different reasons. I enjoy sort of the pressure at times. I enjoy building stuff and collaborating with teams. It's much more creative in that sense. But this, I love the flexibility that this provides, and this doesn't feel like work for me. I mean, it just financially doesn't make sense for me to do this.
Yeah, I hear you. So, yeah, we'll see. We'll if there's any major life pivots, we'll keep you guys in mind. But thanks for the question, Charles, and thanks for your support along the way.
Yeah. All right. When are you guys going to announce? Oh, sorry, it was the same question.
Yeah, I saw there's a couple.
Why were there so few new SoFi credit cards in Q1? And Terry also had an idea saying long shot, but one reason SoFi might have shut down credit cards is that they're about to be acquired. SoFi's about to be acquired?
Yeah, I wouldn't expect that. I'd actually be quite surprised. You wouldn't be building something like big business banking if you're about to be acquired.
That's yeah.
I'm not sure. I actually didn't. I need to look through the numbers on that. What do you have any idea, Tevis?
No, similar to you, I didn't laser focus into credit cards specifically. But yeah, we can look into that. I know it's an area that they've been investing in for the majority of 2025, and largely that's been a money sink. It could be that because they are making so much investment in Q1 on big business banking, on their crypto stuff, SoFi USD and such, that they might want to take a somewhat of a deliberate pause on credit cards or put it on the back burner, whether it's deliberate or not. There's a lot of moving pieces today for SoFi's internal spend, internal investment than there was last year. And last year, credit cards was like the big bet that they were taking. It was the last segment that was burning money for them before turning profitable. And today, you can't say the same thing. They have big business banking that they're investing into. They have the SoFi USD that they're investing into. They have all their, crypto, the stablecoin as a service. Of course, Galileo is always something that they need to pay a little bit more attention to right now. So that could be part of it. It could be a blip that comes back in the next quarter, but I don't think there's anything like a change of direction for them to stop offering credit cards or anything like this.
Yeah. The other factor that sticks out to my mind, and I think you did all the rest, was the younger generation, younger demographic, are credit card averse for whatever reason, and it could just be that they're wanting to lean heavier into different products and or debit cards as well. We've seen them at times in past where they still want to offer some aspect of their flywheel, but they're just not emphasize it. So there's no ad spend. It's not prominent on the webpage. You kind of have to search for it to find it. And I've not been keeping my eye on this specifically, so I'd have to look a little bit more into it. But yeah, that may be just the other factor where they just want to lean harder into other directions right now.
Yeah. Thoughts on BMNR reaching 5% ownership of Ethereum in the coming months? Yeah, I think they're tracking to do it in like the next 10 weeks or something similar to that. If they're acquiring about 100,000 ETH tokens per week, and what are they down? Like 1 million left to go? I mean, you just do the math, right? Like 10 weeks or less is what we're looking at. Probably 9 weeks if we're at the current pace.
Yeah, I think the timing is awesome. We are in a crypto winter, many or otherwise. We'll see. I think will not be out of it when they hit the 5%, but they're going to continue to acquire as well. They at that point in the year were probably past the low point. Now I think we do have lower to go in Bitcoin and Ethereum as well. Could be wrong on that, but the worst should be behind us in terms of the winter. And so that's a great spot to have finished your 5%. And of course, what I'm really curious about that, Tevis, is do they, when they have acquired that amount, do they say, hey, we plan to keep acquiring, especially right now because it's so undervalued? Or do they say, hey, maybe we're going to do some different plans? I guess it might depend where their MNAV is. Maybe they'll slow down the pace or the cadence. I don't know. And then the shareholder reaction. In other words, is it going to be euphoria? We hit the 5%. Or are people going to be like, wait, they're diluting more for more Ethereum? Forget it. I'm done. And honestly, neither reaction would surprise me. But yeah, I'm in this long term. I think that if we're looking at it from a year out from now, BMNR is going to be substantially higher than where they are just because Ethereum will be.
Yeah, I'm not sure what the stock reaction is going to be once they hit 5%. I'm not expecting it to be anything drastic, but what I will say is that the narrative is seriously going to change from an accumulation growth story to a yield story. And that might be, Roy, once they start the point at which they start raising the dividend.
Yep.
I could see that happening. I don't see them accumulating higher than 5%. So it's either buybacks or dividend and
I see.
moonshots. So everybody's asking about this JPM stuff. Yeah, this is a crazy world that we live in.
Well, okay, so let me ask you on that. Not so
we're
much in
gonna
the
we're gonna talk
situation.
about this. Oh, okay.
Well,
Let's
it's
talk about it.
scandalous. I don't want to talk about the details or anything
Talk about it.
necessarily. Like people know, or you can look up what this is. Do you? There's a lot of people that are saying, that they think this is just fake news, that it's a rumor that JPM maybe drum up at themselves just to get attention.
Why
Now,
would
I
they
think
do that?
that's, yeah, exactly. I think it's absolutely baloney, but like legitimately to get job applicants, as sick as that is. But I think there's 0% chance of that. And I'm like, am I crazy in thinking that? But there were people that sincerely thought had to be fake news. There's a lot more applicants. There's more people checking out their website, going on all these different things. A bank would not do that. Maybe some sketchy, tiny market cap company would, to pump themselves or to get good applicants or whatever. But yeah.
So let me ask you this, Roy. Do you think it actually happened, or do you think the guy made it up?
I have no idea. No idea.
Because the story changed overnight, and the only thing that changed was them releasing a photo of this guy. And in the beginning, it was his claim and the very salacious and graphic details of that claim. And the next day, and people were making memes and finding this woman on LinkedIn and applying for jobs and sliding in her DMs and whatnot. And then the next day, they released a photo of this guy, and they're like, "Yep, he made it up," and that's all it took. So I want to know what camp you sit in.
So I would say women don't always make decisions with who they would like to have as a romantic partner based on looks purely. That's looks. We men skew towards looks as being a very high and important thing. It's not that they're not important for women, but they have other factors. So whatever the factors are, I'd say it's not impossible, but so I just don't know. What do you think?
I think so much. I don't know how much I'm going to say, but I think so. Okay. What I will say, yeah, exactly. Such a professional answer from Ron. Look, man, I think if in fact this dude made it up, which that's the direction that I'm leaning towards, because I mean, like some of that language, I don't know. It was very much very charged, let's say. And I don't know. I don't know if the story is corroborated by anybody else or um, we're gonna wait to see more details. But if this guy made it up, which is what I'm leaning towards, okay, he will not only have set back actual men who like there is already a taboo, already a stigma that it's like, oh, this is a one-sided type of issue, and yeah, it does happen the other way around, and it kind of would
Yes.
be really shitty if the biggest story turns out to be the guy is lying because it's like, dude, come on, you know.
Yeah.
So that's the first thought. The second thought is this woman is going to be so filthy effing rich from that defamation lawsuit, Roy.
Oh yeah.
Uh,
If it is
like
fake, yeah.
she is an executive at the biggest bank in the world, bro. The amount of reputational risk and as a result, the amount of the payout is going to be staggering.
Yeah.
So I, yeah, I don't know. It's an entertaining story for sure. Just another week in the markets.
Yeah. And as much as people joke, like if you're a married man, especially, or a moral man where you're like, I'm not into that, that's not a great thing, no matter who is doing it. So yeah, I saw lots of questions. This is Fiesta Friday, so I'm like, Tuesday we'd be like, nope, not even gonna touch it. Fridays we open up the box a little bit. So
I posted to the guys because this woman was Albanian, and I posted. I think like a bird hit my balcony. I posted to the guys and was like, all right, so this is like, there's such few examples of like Albanians in the news, and it's like this woman, and then you have like Martin Shkreli, and you have Eric Adams, and Dua Lipa, I guess, are like the and the OpenAI Mira Murati, who is now at Thinking Labs.
Yeah.
There's not a lot of them, but there's a
in
story
case
about
people
all of them, I guess.
in case people are thinking you're racist, like you're Albanian, so
Yeah.
it's
How
I
would
guess
that be
it's
racist?
okay. What's that?
How would that be racist?
I don't know. Like somebody be like, "Oh man, Tevis, like he hates the Albanian." It's like, no, he is. Yeah, so
Yeah.
it is a
Yeah.
little bit funny. So
Um, guys, I love you, and I love some of these questions, and they're hilarious. But I'm not actually going to throw up any of these questions. I'm losing my hair. What can I do to preserve it? Hymns, Franzi. That's always a solution. Yes, Jim Belushi is Albanian as well, and his brother as well. God, okay. People are asking personal questions now, and I'll throw up some of these. But let's go to the donation first of all. Jack, thank you so much for the $10. Jack says, member of the SoFi Bag Holders Union. Hey, Tanner needs to know. Some of us fools bought at $30. It happens. Year to date, S&P plus 5%, SoFi minus 40%. That is unfortunate for Mr. Jack. And look, some people did buy at $30. That's fair. Look, man, I bought it at like $22 back in 2021. I mean, I only bought like, 20 shares or 30 shares or something. I actually think my first buy was like 69 shares at $21. And it wasn't for the memes. It was just that's how much money I had in like sitting in the account at that time. But if it's a company that you're just not buying as a result of hype, you'll average down. And that's as simple as that. And if it is a company that you're buying because of hype, then enjoy your losses because the market is teaching you a very valuable lesson. And let me tell you one more thing, John. There is going to come a point in time where we are back to $30 a share. And you know what's going to happen at that point is people are going to rush to buy it again because it's going to be back in like back in vogue, let's say, right? That's just the reality of the market. It is a vehicle that tests your emotions like none other on a consistent basis. And it's a mechanism for discipline.
and I'd be pretty surprised. I mean, like anything could happen, but I'd be pretty surprised if we're not north of 30 again this year. But yeah, long term, I'm still very bullish on SoFi. But yeah, not the right space for immense growth right now. But it won't be an opportunity cost forever.
Yeah. All right, let's move on. Thank you, Jack, again for the $10, and my thoughts and prayers with you and your bags. Did SoFi mess up by assuming 2 rate cuts this year? Will they miss earnings this year? Yeah, look, this is what Noda was saying also in that Kramer interview after earnings. Like the macro changed. You can't predict a war in Ukraine. That's going to change the macro. Now, you could say, well, why would they predict 2 rate cuts in the first place when there's a new Fed chair coming? But their view was consistent with the consensus view. That's what the Fed themselves were saying. And so for them to step outside of what the Fed is saying for their macro assumptions, they're taking on an outsized risk to do that. Today, they're expecting 0 cuts. Realistically, I think we're going to have 1. So I think it's actually going to be in their benefit, and they're being overly conservative. But at the same time, I would rather them be consistent and reiterate guidance as opposed to raise it and then miss it.
Yeah, much better than doing that. That would be something that maybe HIMS would do, and the stock market does not like that. This is where we're at as far as rate cut probabilities. This is where we're at towards the end of the year. The consensus is no rate cuts. About the same, say we're adding and we're hiking one versus we're lowering one. Powell, I think himself, in his last speech that he did this week, you kind of hit the nail on the head that the curveball, they've been throwing a few curveballs, was the invasion of Iran, or the blockade around the Strait of Hormuz specifically, which is a driver of inflation over the short term. It's the reason why Powell is actually staying on the board instead of doing the customary thing that after you're a Fed president that you resign, giving 2 seats to Trump. He's caused this himself, frankly. So it's not too, like, it took them by surprise. It took most people, us included, SoFi as well, and everybody like that was projecting this amount of the rate cuts. It was a shock. So the reality is, it is what it is. I don't think that they messed up. In the past, they've oftentimes guided for fewer cuts than what the consensus was. This is the first time that they've done on the nose, and I liked it. So even though it ended up not working out well, I still think it's the right approach, is go with what the consensus is unless there's a real material reason to differentiate. And frankly, if they came out at the beginning of the year and said, we expect 0 rate cuts, people would have looked at them like, you're crazy. What are you talking about? So,
yeah, exactly. And ultimately, it wouldn't have changed anything, right? Because every quarter, you're back to square one in terms of your estimations. If they said we expect 13 rate cuts, next quarter, they're still going to expect 0. So they're better off following the consensus view from the Fed. And that in itself, like, logically, you should point in the direction of like, okay, well, it's out of their control, because it is. They can't control the economy. Hey, Ron, how great was the Dr. Roy on the call this week with Robinhood? Well done and bravo.
Yeah, that guy was pretty good. No, seriously though, it was awesome being a part of that call, and I realized after, so they have a video component, and I did have my video on. I don't know if something went wrong with that, but I realized with the stuff behind me, Miami thing's probably fine because it's a Robinhood jersey patch, but they may not want the other names on there too. So I had no image displayed, but yeah, it was a fun moment, Vlad. Well, I didn't even put Dr. Roy, Dr. Crossroads or anything. They just know. And so they read off, this is Crossroads, Dr. Roy, and then Vlad is Dr. Roy. I'm like, oh man, they're awesome.
Yeah, good gang. I just noticed we're both matching again today with black. I swear, guys, we don't pre-plan this. It's just
oh, come on,
Roy and I are on the same page.
We buy matching shirts. We try to have a matching wardrobe, you know.
Well, last time we were both wearing like blue, and I think the time before that we were both wearing green or something. And it's
next time purple.
Did you watch the Paul Tudor Jones interview? I saw it. I didn't think it was that great, honestly. He was talking about like he wasn't talking about markets that much. I don't know. I had it on in the background, and it was okay. But
yeah, I have not seen it.
Has the $200 price target changed? Is it higher? I think they will go higher than 200, but the target is still too. I'm not a Wall Street analyst, Nofo. I'm not going to chase the price target every $10 that it moves. It's 200. I said it when it was $80. It's 200. SoFi is still 45. And I set that when SoFi was like $28, and today it's 15 or whatever. My target is still $45. Okay, that's how yearly targets work. You set them once and you don't touch them. All right, what are we expecting for free cash flow for NBIS if they get to about 50 billion in recurring revenue? So I think there's a couple of pieces here. I think number one is the EBITDA margin. If we're assuming an EBITDA margin, which is going to go up over time as they get more efficient to, let's say, 45 to 50%, then we can start to work backwards. I think the other piece here is the CapEx. Interestingly, on the depreciation schedules, Roy, I think it was Meta. I have this saved somewhere from my NBIS video, but the depreciation schedules are looking to be like 6 or 7 years as opposed to 4 or 5 years. And I think that's going to be folded into the profitability as well. I think, Yeah, I'm not sure for capex. Like I could see it, or for free cash flow.
Yeah, I'm not sure. I've not done those calculations, so I should.
I
DCF,
could see
like,
it being like off of 50 billion. I could see it being like 8 to 10 billion ish, off of 50 billion ARR steady state. Like that's totally feasible for me. Again, this is just me sort of back of the napkin doing the mental math, not necessarily um, having modeled this out on a spreadsheet or anything. But the main pieces that I'm looking at are the capex, along with the capex, the depreciation, um, as well as the EBITDA margins expanding as a result of their acquisitions and their growth. Would you rather Anthropic or NBIS?
I mean, the one I can't have, Anthropic.
You would have Anthropic over NBIS? Let me make it more
Well,
difficult. Anthropic at 1 trillion or NBIS at 40 billion? You have to buy one today. You don't own either.
NBIS.
Yeah, I would agree. One's $40 billion, man. It's a drop in the bucket. And from a roadmap perspective, like they have a lot of runway.
But if Anthropic debuted at a trillion, and I usually don't buy IPOs, I would probably buy that one. Not a huge amount, but I would buy some. I've liked them for years, and I've not said the same. Like people can look back, a year and a half ago, 2 years ago. I've not said that with OpenAI.
We've talked about our desire to get into Anthropic multiple times when there were many multiples smaller than what they are right now. And I would still happily buy Anthropic at $1 trillion valuation today because I think they're going to be much higher later on. I think the story is like, dude, look, I showed you guys the growth 44 billion ARR, and that's up 14 billion. It's up 50% month over month from 30 to 44. Month over month, mofos, month over month, not year over year, not quarter over quarter, month over month. Yeah, sure, I'll buy it at $1 trillion. You know why? Because 6 months from now, their ARR run rate might be, 150 billion, if not more, probably more. Jack, big baller. Paddle looks much better, Roy. Anthony Noto is a stud. Standout linebacker at West Point. Army Ranger. Wharton MBA. That dude is slaying LinkedIn profile. I can trust him for another year on my leaps. Spoken like a true bag holder, Jack, my friend.
Yeah, for real though, like with the earnings sell-off, it's probably the weakest quarter that they're going to have this year, and it was a very good quarter. A little bit different than we expected in some ways. We won't revisit, but I'm thinking of the same for SoFi as also Robinhood. Better quarter for SoFi. I'll just say it like it is than Robinhood. But for both, the way that I would add is I've got a certain level for Robinhood at $60 and below. I'll start adding some leaps. I only own shares. I don't know that it'll get there. I doubt that it'll get there, but it could. And also with SoFi, I have to figure out that level. Is there a level, Tevis, where you buy a meaningful amount of leaps, assuming nothing has changed with SoFi or the macro?
I mean, I did buy like almost 20 grand worth of leaps 3 weeks ago at $16.
Yeah, so I think that's. I think for me it's 12, but by significant amount, it might be 10% of my portfolio just in leaps.
Oh, okay. I don't know, maybe. The thing is, like, technically speaking, SoFi has to hold around, like, if we break below 15, like I'm more confident that we're going to 12 or 11 than we are going back to 16, But right now we're looking fine. If we break 20, so conversely, Roy, like I might buy a lot of leaps at 20, more than I might buy leaps at 12. And that sounds so crazy, but from a technical perspective, like you just clear the last local top on the technical chart, and it will be signs of a technical reversal. And I think once we clear 20, it's going to be a straight shot to 25 plus. But right now we're oscillating in this range between 16 and 20. We can't break further beneath it because it's going to get ugly if we do. So, yeah. Let's see. Did we talk? Yeah, thank you again, Jack. Jack is one of those people who like invested on the hype and then became a community member halfway through, you know, like
It happens.
like me and NFTs.
Mm-hmm. Oh man, you were in this? Bummer.
Yeah, oh yeah. Oh yeah.
I wish we knew each other. I don't know that if I could have talked you out of them, but man, they
Okay.
never.
Let me tell you one thing, Roy. Let me put this down. I got into NFTs and I was working with a company that was offering their own NFTs. And they hooked me up with a whole bunch of other like dev teams. And I got to be part that, like, I'll never forget this. This is probably one of the most tragic things. Okay. I got involved in the minting process for one of these NFTs. And I was able to mint two, I think, NFTs in the original minting process of one of these super hyped projects. I minted them and I flipped them immediately, like within 1 hour of minting, something like that, for double. Okay. So I made about $2,000. And I was just like, I made $2,000 just from this connection of having this dev. Love it. Amazing. Go to sleep, wake up the next morning, $80,000 are those two NFTs.
Yeah. I remember the craze. And
like,
some are still worth some things, but yeah. Yeah, like I do see like limited application for NFTs, but like the way that it was portrayed, especially in 2021, was I think people were just chasing the next thing. And they're like, okay, crypto already good, you know, all these other things that have run and like everything had ran, and they're just desperate for the next play. And when we do that as individuals, and that also happens in that moment of euphoria, which frankly, like if you want to look at bubble, go back to the way people were thinking about investing, including myself. Like I wasn't active on social media that much then. That was euphoria. That was a bubble. 2025, 2026, 2024, it's nothing close. It is nothing close. NFTs, man. Do you think there's something out there that is the NFT of this cycle?
Oh God. How about that toilet paper company that just became an AI company, Toto? Did you see the news today?
I saw it mentioned in the comments, and that shoe companies becoming AI companies, Toto toilet paper company. I mean, it's just kind of, when will SoFi pivot away from this silly bank idea and go after AI?
Yeah, dude, Aaron, I was severely depressed for like a week. I wanted to just cry and scream and punch a wall and like all in one. And it's just like, and back in 2021, 80 grand, like making 80x in one day, that was like life changing. You know, today it's like, okay, you'll make 80 grand. And like, it's amazing. It'll make my year, but it won't change my life. Back in 2021, it would have definitely done that. Yeah, that was the one time, my one NFT story where I still think
That's
about
crazy.
it, and I don't think I'll ever forget it.
You need to note that clip, by the way. You need to make that into a clip.
My NFT story?
Yes. That's a banger.
I don't know if I want to relive that part of my life, man. Anyways.
Yeah, it's not as bad, but it's like me selling silver heavy at like 35. It's like, well. Went over 100. I'm like, are you kidding me? I sat on this stuff for like a decade. But I mean, it kind of shows you like what you were talking about earlier, that when you break out from a technical standpoint, it can be off into the races for a while, even if it does come back down. So, um, yeah.
Yeah, let's keep going. We have 35 questions left. We had 27 questions like an hour ago. So,
All right, I'll be quick.
are you in Celsius? No, I'm not. Haven't looked at them since last year. Does capturing the cloud market in EU factor into your Nebius thesis, or is that an afterthought? Yes, the EU has, I think, a $20 billion contract that they want to split across 4 or 5 companies, and Nebius is a prime contender in those. I've talked about that before. They are working with Accenture for that, and I think they're going to end up winning a part of that contract. By the way, Roy, did you see the tariffs on the EU today? 25%?
No. Wow.
Trump's back at it again, baby.
I guess we had 2 weeks of green, so now it's time to tank the market again. This when I first got into Nebius, and then of course I've cycled back. It's like the cherry on top. I didn't pick Nebius out of the other inference providers just for this. But if there were two that were perfectly equal, and Nebius being in Amsterdam versus CoreWeave in the United States, I'd pick Nebius.
Yeah. Do you think Robinhood will bottom here to write some cash secured puts for $60, and how far do you usually sell them? I think $60 are safe. If I was selling them, I would go probably about a month out, or maybe a month and a half.
Yeah, I think the better question is if you like owning at Robinhood at $60. If you do, I mean, I wouldn't hesitate. I wouldn't write them out, significantly far, but like Teva said, that's not a bad take. It is not into earnings also, so could be a good opportunity. I think that we have a little further to go, though, just because of crypto winter.
If Dems win midterms and AOC and Bernie have it their way with moratorium on data centers, how will that impact Nebius? Negatively for 2027, but for 2026, I don't think it's going to be a big impact because Nebius already got their approvals in before the moratoriums really started. And we don't know what 2027 looks like for them, but they're going to have more US expansion. And so that would probably be negatively impactful.
Yeah, I don't think that there will be a nationwide one at all. But, we could see some state level or localities beyond just Maine. I think that we probably will. So that might slow some things down as far as future development, but I wouldn't worry about. Although, so I'll say one thing. If this ends up causing a great sell-off in data center names, that could be a tremendous opportunity.
Yeah. Yeah, it could be. Especially because they're so volatile. Jesse, Tev, what options, if any, did you buy or sell post SoFi earnings? So I sold $20 call options earlier today, and I sold $24 call options before earnings, which are still open for May 15th. And I have $16 puts, and I also sold $16 puts for July 17th. I posted about it on X. So basically, I want SoFi to stay for the next 2 weeks in the range of $20 and $16. If it goes above 20 and those covered calls are taken away, then such is life. Or I might roll them out, a couple months out. But yeah, that's the range that I'm really playing in with SoFi, 20 and 16. Best advice, investing and life advice you've ever gotten?
0 DTEs, YOLO. No, just kidding. That's investing advice is that time is your greatest asset. My dad, when I was like 12 or 13, took me and taught me about compounding gains in the stock market and historical stuff. And it was really easy to see, exactly what he's talking about, the wisdom to retire. And so I've had that mindset, not always been able to contribute, like I've always wanted to, but time is the greatest asset for sure that you have, not just from an investing standpoint, but I guess on the life side as well. No matter what you believe, what awaits you on the other side or not, what we have in this life, like time is an asset that you're just not going to get back. Money can come and go. You have times where you're very healthy or not, relationships, but time is only flowing one direction at all. And so treat that as a precious resource. And there is like we've talked about this in the past, the time value of money. There's a point where, and it usually happens later than it should for a lot of people, where they begin to all of a sudden realize how valuable time is because they're running out of it. And so at that point, the money and the stuff doesn't matter as much. So make sure you're building your life around something that actually has meaning. And it's not the number that's on the screen for this. That's what enables you to be able to do those things that you find meaningful and enjoyable about life. The number here is not the goal. If it is, that's a pretty bad goal.
Yeah, I don't think I have anything to top that. I think that was great. And any advice I might give is probably going to be toxic. So, so we'll stick with that. All right. What is a good entry price for Figure? I was in at 36 2 weeks ago, and it tanked, and I just got out, waiting for it to retrace back. Do you think it goes down based on SoFi earnings?
Not based on SoFi earnings, no. It's interesting, like looking at it, and I need to start doing some videos and a little bit more content on it. I think it's kind of like with Robinhood earnings, where they have this tremendous acceleration, and they've not accelerated as far as just if you're looking at it from revenue much or significantly. So they'll still put in like 100% year-over-year revenue growth, and next quarter, I believe, as well. And then they start to have the higher comps. And so really the question is, can they begin to accelerate beyond that? And will some of their newer ventures, like the on-chain private equity network that they launched, are they going to continue to see more acceleration there? So I don't hate the price here. I think anything under 40, if you're looking long-term, like over the next 5-10 years, is a great opportunity. That's how I'm seeing it, and I'm adding accordingly.
Yeah, Catherine understands. She's like, just drink and keep it to yourself. Yeah, I was gonna say nobody cares. Work harder is my advice, and then I said it in my head, and I was like, "Oh, that's toxic as hell." Tevis, don't say that. But did Tevis dye his hair? It looks darker today. Nope, same old, same old. Yeah, I never have dyed my hair other than the time I got frosted tips at 14. So I don't think I'm going to be doing that anytime soon. So if I get into the S&P, no, they did not. I don't even think they're eligible right now. So the best thing, Anthropic, is something we can't buy. Yes, that is the byproduct of being a poor. The both of us included, by the way. Did we buy anything this week? Plan on buying this upcoming week if it dips.
I may buy some more Wix next week, but I did not buy anything this week.
I may buy some more Meta next week, but I did not buy any Meta this week. Kelly says, congrats, Dr. Roy, on your doctorate.
Thank you, Kelly.
Okay, let me bookmark some more questions. Did you see Zeta results this week, Roy?
I didn't. No, that was one that I didn't have my eye on just because, and it was hard this week. There's so many companies that I want to learn and know more about and see how they did. So Zeta wasn't one of those. How'd they do? Did you catch it?
I think they did well. The stock reaction, I think, was well. I didn't look at any of their results.
Yeah, it looks like, let's see here. I won't look up their results. I'm just kind of curious how they did over this 5-day stretch. Yeah, they popped. They kind of fell back a little bit.
Are you trading K-Web for the China meeting or looking at NVIDIA June, July calls? Lower volume at the moment. I don't know what the hell K-Web is.
I don't know either.
Yeah.
Crane shares, CSI China Internet ETF. Yeah, I stay away from Chinese investments personally just because of ADR stuff.
Yeah. Regarding Microsoft and OpenAI ending their exclusivity, is that bullish or bearish for Microsoft? Is it bullish or bearish for OpenAI? Bullish OpenAI, bearish Microsoft.
Yep.
Rubin delivers 5x over Blackwell. Feynman maybe 1.5x. Algorithms improve 3x per year consistently. When does software beat hardware per dollar invested? That's a good question.
Probably within the next 2 years, but no, it'd be a little bit longer than that.
Yeah, here's how here's my mental model around it. Right now is the hardware supply constraint, the catch up. Next is going to be energy and memory, and then next is going to be software on that. That's how I'm sort of like breaking it down. Each of those phases is probably going to be between 18 months and 2 years.
Yeah, I think maybe 3 years might be closer, but yeah, I feel like it's a question of when, not if.
Yeah,
Just nice.
later than 2026, before 2030. All right. Are we applying to work at JP Morgan? No. I need a good penny stock. Any suggestions? Degen Tevis, buddy. Air Technologies.
Yeah, it's not really penny stock anymore, unless you can go back in time.
What's a good swing trade idea? Rocket Lab into SpaceX earnings.
That could be a good idea. Yeah, I like Wix here. I think it's like looking at base 44 and how that's doing. The cash flow of the company, which is slowing as far as their mature line, and then the buybacks. Depends on your time horizon. If you're looking at it for like a month, it might not go anywhere. But if you're looking at it for a year and a half, I think it's a good opportunity. It could be much sooner too.
Yeah, honestly, like I even think Meta at 600, 15 or whatever it is, like I could see it being over 700 in 3 months. I could definitely easily see that. Why not just sell covered calls or cash puts to make up your income like TJ? He's talking about us quitting our jobs because I don't have that big of portfolio where me running the wheel all year long would make as much as I'm making in my actual job.
Likewise.
Yeah. At some point it will. And at that point, I'll probably do that. If JPM acquired SoFi, how would you feel? Noto could be the next diamond. I'd sell all my shares.
Yeah, I wouldn't keep JPM.
Yeah. I'd be happy about it, but I'd sell all my shares. If you had to guess Anthropic's market cap for 2030, what would you guess? 2030.
Yeah. I mean, it's not as far away as it sounds. We're in 2026, so
yeah,
3.5 years.
Look at how much they're growing every month, man. You're talking about 4 years. I would say like 7 trillion.
Okay.
They're already at 1 trillion right now, bro.
Yeah.
They're not even public. Yeah. What do you think happens when we go public?
Yes. Yeah. No, I do think that if all the other companies in the world don't increase their market cap, which is a ridiculous assumption if Anthropic grows the way I think it's going to grow, Anthropic would be the largest company in the world in 2030. So look at NVIDIA's market cap. That's where I think Anthropic can go. And it will look expensive in terms of multiples still. Incredible growth, but yeah. And at that point, when people are saying, hey, it's a bubble, they might be right at that point.
Yeah. Aaron likes stocks donated $2 saying this is for the TV fund. How much does a TV cost these days, man?
We got cheap in the United States.
Hold on. Amazon. What are we buying, guys? How big is the TV got to be? What's a big set? 50 inches? 50-inch smart TV. All right. A 50-inch smart TV, the first result I got here on the screen.
It's like 500?
Yeah, like $400, $500.
Yeah, that's the one area, like if Kathy Wood back in 2020, 2021 was talking about disinflation. Like if she was just talking about it with TVs, she would have been so right.
All right, but listen, this is 500 Canadian dollars. Okay, so let's do the math. Okay, hold on.
That's good.
Add to USD. All right, and we put 500 Canadian. That's 367 US dollars. And we do 367 divided by 2. All right, so Aaron, you have to donate just the same amount about 183 more times, and then we're good on the TV. You have filled the fund. Yeah, $360 US. I can get a 50-inch TV to put right behind me. So I shouldn't have said that. I should not have said that because some guy will do it and force me to actually put a TV back here, and I don't want to do that. So
With his face.
yeah, Big Beard said he'll send me his TV if I pay for shipping. Guys, the TV, it's not all it's chalked up to be, man. Because if you put it on, then there's going to have to always be something on the TV. And yeah. Okay, let's move on. What did you think of SanDisk and WDC earnings?
Yeah, I only saw SanDisk's, and they were incredible.
WDC, Western Digital?
Mm-hmm. Yeah. I heard they did fine, but I didn't look personally. But yeah, SanDisk, I had something that I pulled up. I can pull it up real quick here. So here is, yeah, I do have it actually pulled up. So throw this up, please. And I'll just do it this way. Okay. So, and that's not quarterly. There we go. Okay. This is quarterly revenue. Do you see anything that happened this last quarter?
Crazy. What is going on in the world, man? Like, holy crap.
Well, and the insane thing is, this is showing the pricing power that they have right now with this constraint. Right here, 69.1%. This is not gross margin, Tevis. This is operating margin. It's obscene. This is a company that historically has not had that. We can't go much further back because they've not been public that long. But yeah. If you look at estimates and then revenue, look at this revenue long-term trend. This is analysts doing revisions. It's crazy. So yeah, very good earnings. I didn't see any moment of weakness or anything there. So yeah, congrats to shareholders. Up a measly 331% year to date.
65-inch I'll do right now. This is why I don't do this shit, because this is what I started. All right, Jesse, a 65-inch is $600 is what I'm saying. How the fuck are they this cheap, Roy? What the hell is going on?
Dude, like, that's been a major area of disinflation. And I do think that's something that I think Kathy Wood was wrong somewhat, but mostly was just way too early. When robotics actually gets serious, and it's going to be, it might not be for a decade out. I think that we actually will see a lot of struggles with disinflation. It's something Elon Musk has talked about with UBI, not just being necessary possibly because of what's happening with the job markets. And I hope that's not the case, but just to prop up to try to prevent disinflation. Because at least the way that it's here in the United States and actually most economies is a little bit of disinflation is okay. But the problem is if you have rapid disinflation, if you're looking at this TV, Tevis, and you're like, hey, it's $650 for this TV, but next year I can get it for $400, you might wait until next year. And the problem is enough people doing that and holding off purchases because of disinflation, that slows down the economy materially. So a little bit is okay. In certain areas, it's fine. Widespread, that's a scary thing. And I mean, there's worse problems in the world than like rampant disinflation because there's a lot of ways to combat that. And the government loves printing money. So I think we'll be okay. But interesting times, man.
Bro, Express Investing donated 20 New Zealand dollars, and I got scared for a second because I thought it was Jesse actually donating the full amount. Guys, please don't. Like, where am I going to put a TV here? You see this? This is. I'm not going to put a TV here. This is ridiculous. If anything, I'll put it in front of me, but I don't know, man. This is ridiculous.
You're racking up those donations, though.
This is like the paddle thing all over again. Yeah. My house is small, guys. I don't have room for this. I would give you guys a house tour, but I'd dox myself in the process. But like, I mean, Roy hasn't seen. It's a very small house. I got a big bookshelf. I could probably show you guys that. But yeah, no TV. Exactly. Don't disrespect my my nice prints in the background with a
I
freaking TV. So industrial.
I really am thinking though, coming to that meetup in August. So yeah,
Yeah,
up in Toronto.
you can stop by. It's yeah, exactly. It's cozy. All right. There's no TV in here. Uh, $7 for a bigger house. Thank you, Mamba Mentality. Love the name. Love the donation. It's gonna go. Hey man, it's oh, it's actually $7 Canadian for a bigger house. Thank you. That's gonna go towards me moving the hell out of here. But yeah, Roy, once you visit, you'll see what I mean. I got my 3D printer. It's over there in the corner. I have my paintings that I painted myself. I have my guitars. I have a record player with a shelf full of vinyl records. I have a chess set right on my coffee table. And then I have my bookshelf. It's like a whole wall for the bookshelf. And I have 2 little love seats, and that's it. There's no room for a TV. All right. It's a nice, cozy little living room. It does the job. I'm in this room like 90% of the time, anyways. So, anyways, I bought them on Etsy, chair. Bro, are you 80? Hey man, this does the job. No room for there is room for wifey. She just has to be small to fit in here. So we can make room. Anyways, let's move on. Did I play college basketball? No, I did not play college basketball. I did rugby in college, so that was fun. Chris and Amit bought up the very last minute on stream about Yahoo making a possible comeback and IPO. What are your guys' thoughts, positive or negative in general, and with the AI space? I don't know what Yahoo would do these days.
Yeah, I mean, I'm not sure. Like, I know Yahoo Finance was something that was seen as attractive a couple of years ago, but like, look at what Perplexity has done, and I know in partnership with others. Look at even what OpenAI or Claude have done, where if you type in a stock name, even with X, I think the value of what that interface has looked like is probably down substantially. So they may be looking at it from another angle. I'm sure that they are, but yeah, that's news to me.
Yeah, I don't know. I don't know what Yahoo would do. Are those 2 NFTs on the wall behind you? This is shit that'll get you banned. I think there was somebody last stream that got put on a timeout for making this hurtful commentary. I don't want to look at those NFTs ever again. Okay, those little freaking JPEGs are worth $80,000 that I don't have right now. So, all right, do you guys prefer to add to your existing positions, or are you looking for new blood? How do you know when you've built enough of a position? Great question.
I have certain allocation levels usually when I get into a name, and if I become more bullish because of either catalysts or the share price, I'll increase that up to a certain amount. Usually that's a 10% allocation, no higher, unless somewhere is in my swing bucket. Except for exceptional names, and that's really just Palantir and probably Robinhood as well, where I'd go above the 10% allocation. So I personally prefer to chase shiny objects. I know that about myself, and I don't think that's the best way to invest. So as a result, I don't. And I force myself to say, okay, what out of my existing positions do I actually like? And I want to add, and I don't have enough. And so I'll add first there. And then when I find something that's too compelling to ignore, like, this year I've added 3, or really over the last, I guess, year, that's when I'll create that new position. But I'll wait for ridiculous opportunities and stocks. I guess there's 4 because of VG, rather than try to force it.
Yeah, I would say I start around with like, what do I want as a frame in terms of fewer names, being more concentration, being higher risk but higher potential reward, with more diversification on the other side, being a lower risk but lower reward. And I generally say I want to stick between 8 names, and from there, then it's a relative ranking against each other. So, for example, my cost basis is reflecting my confidence in that particular name to capture outsized returns. If I buy, I don't know, let's say 10K of NBIS and I have 20K of SoFi, then the arithmetic that goes in my head is like, okay, well, am I doubly as bullish on SoFi as I am on NBIS, so on and so forth. And over time, what that becomes is I just get a gut, on what I want to be adding at any point in time. And then I look at the composition and say, okay, which one do I feel underinvested in? And which one am I having trouble sleeping at night that it's like, maybe I should trim this down a little bit because I'm too concentrated. So
good way to do it.
Express Investing says NFTs are digital. I actually can't put them on the wall behind me, but here's an idea. If I had a TV behind me, then I could replace those with actual NFTs. You can bring them back. Yeah, this is the Friday show, so we're a little bit more lax on this one. Upcoming SoFi vote. I haven't heard about this, Roy.
That's for the shareholder annual meeting. There's, I believe, 2 votes on there. They recommend yes on all of them. One is just for the board of directors, and the other is compensation. The interesting thing about that to me was I was kind of wondering if they would have a new package that they would outlay for the C-suite. There's not. So the only thing that stood out to me is, and they've been deliberate in this, is shifting over the named executives so that 50% of the compensation is based on performance. I like that. But I'll be voting yes.
Yeah. If Travis had to give advice to an American guy wanting to date Canadian girls, what would the advice be? How about a Canadian guy wanting to date American girls?
Well, he's the latter, so.
Yeah, exactly. I don't even, we're not from a different planet, man. We're like literally neighboring countries. Most of the mentality is the same. Although it's kind of funny, Michelle was messaging me today, showing me all their guns. And she's like, I got this one, and this one's really cute. And this one's on the shelf as like a display thing. And this one's loaded. And it was just like sitting on, and I was just like, okay, this seems like a foreign planet when you compare Texas to Toronto. But yeah, Raven, I have no idea on giving that advice. Sorry. Roy, do you have any advice? Yeah, exactly. I'm not even
I've
from
been married
here.
way too long.
I'm not even from here. Express Investing, thank you for the $5 New Zealand TV fund for a reminder of those NFTs. Yeah, thanks so much for wanting to bring back that trauma in my life. How are we bearish hood in this market? Roy, are you adding? What do you all think of earnings?
Yeah, this was my kind of response to this, and also a short-term and long-term thesis as well. And I posted it. It's pinned to my X profile. It's on Artemis. They have like interactive charts as you look through. It's pretty cool. But anyway, this right here tells you how I think about it. That there's short-term headwinds, mostly related to crypto winter. I do talk about those short-term issues as well. But long-term, like, they're positioned so ridiculously well. So I have no problem adding. The problem is they are a large percentage in my portfolio. And so when I have that, and I'd still like to add, I'm usually pretty greedy on the price. So I'm waiting until Robinhood hits 60 or below. It may not happen at all, and that's okay too. Because again, I got a lot of shares. But if it does, I'm going to buy some leaps. A good amount. Not 10% of my portfolio amount, but a decent amount.
You keep throwing these ultimatums out there, and like, you're gonna get a world with Palantir's at 40 and Hood's at 40, and you're like, uh-oh.
It's always with the caveat of like nothing material has changed negatively. If Vlad is out and I don't know, like they're who knows? Yeah.
Yeah. June says best way to find out what would make a girl happy is to ask her. It's probably the worst way, June, because they don't know what they want.
Yes. High
Sorry,
five.
but yeah, exactly. Right. You're here.
Yeah, there we go.
I always mix these up. It's because it's mirrored.
Yeah, it is.
Like, yeah, this is my right. But okay, let's.
We're gonna lose like the 3 females that are actually in the audience.
Yeah, what is this
This
stream? Just such a shit show. All right. Did you buy a TV yet? No, I didn't. When OpenAI and Anthropic are building and have financial statements, will their stock-based compensation show as similar to cybersecurity companies or on a whole another level? Raven, you're asking the hard questions today. I'm going to let Roy answer this one, and I'll be right back.
It's going to be extreme, depending on the nature of the SBC. Usually, those are granted at certain levels, and you've seen if it's a level based on revenue, if it's a level based on clients, it's a level based on name recognition. It shouldn't be, or of course on valuation. They've accelerated so immensely that even the most extreme that was going to be given as far as PSUs looks like that they'd be given. So it would make, if you're looking at it just on that time frame, the SBC look absolutely ridiculous and egregious, well above and beyond cybersecurity. Like Palantir levels January of last year, when all, and I mean all of the RSUs and PSUs basically got hit for the average regular employees. People were like, this is a company that all they do is SBC. It's like, they don't. But I mean, we see this with a lot of different companies too that are in those extreme acceleration stages. A little different for a startup, but NVIDIA is one of those. Where at one point, I think like 90% of the people that work at NVIDIA were millionaires, like just because they had these grants that were going to be given to them at these much higher levels than expected.
Yeah, dude. What's the story around that like front desk girl, like secretary at Apple or at Google, who like bought multiple mansions, supercars, and all of this stuff, and they just worked their entire life as like a front desk person and
Yeah.
made bank just at the right company.
Yep.
Now people are talking about dating in the chat. It's just devolved into chaos. Roy, I apologize for the debauchery of my chat. Any updates around Clarity? Stick around because tomorrow I'm making a whole video on that. Have you guys watched Tanner's last video on BMNR? Isn't them diluting below MNAV something disturbing? I haven't watched the video. Are they diluting under MNAV?
We don't know that. The problem is Tanner is making the assumption. I've not seen the video, but I have heard him comment on this, where he's questioning where it's coming from. I think that's a fair question. They've said that they would not dilute below MNAV, but the further that we move away from the previous earnings, the less certain that MNAV number is. So we'll know exactly where it was at the time of the previous quarter ending, and then you can actually look at the level that they're selling. I think that they're very close, but probably not under, even though I know a lot of the trackers say that they are. Those, again, are just estimates and guesstimates. We don't know for sure.
But they released their share count like last week. An accurate share count from their SEC documents that they released. And they have mentioned that they're not going to buy under MNAV. I know they're under MNAV right now, but as well, their cash fluctuates. They had 1.1 billion the other week, and now they have 900 million. So I don't think it's deterministic that they're actually diluting under MNAV. You'd have to do the math on that. But we do have an accurate share count, Roy. So like right now, we will be able to track it out more granularly than before.
I guess I missed it. I didn't see that. You said it was a week ago, so the 20th?
Yeah, I mean, about a week ago or maybe 2 weeks ago. Just go into their
SEC filings?
Yeah.
It's interesting that they would disclose that, since they haven't in the past.
Well, they disclosed it because they came out with the buyback stuff, right? The 4 billion in buybacks that they were announcing. And so they disclosed. I can find it easier on X, I think, than I can find it on. Yeah, here we go. Just released its 10Q. Here you go, Roy.
Okay.
This is from April 15th. BMNR just released its 10Q, and here in their 10Q, they say common stock as of April 13th was 537 million shares. So now 537 million shares, you do the math, and you'll get to what their MNAV is. So yeah, you can have the actual filings here. Anyways, neither here nor there. The point being that people track this on a more accurate basis right now because we have the share count. And so if they were in fact diluting below MNAV in a large way, I would probably know about it by now because people would be shouting it from the rooftops. So I'm not sure what the calculation is that Tanner is doing. But I do want to say that, like, my gut would say that it's non-deterministic. So we'll see. Because they said they're not going to do that. And, like, at some point you have to trust management, right?
Mm-hmm.
All right. Let's thoughts on Intel.
I wouldn't buy it here.
Yeah, I wouldn't buy it here either. I mean, a nice little win for POTUS. What did you say? They got a 3x out of it. It's not like they can sell, but sure, great. ZW says, love the chill vibes. Keep it up. Thank you.
Thanks.
Any chance we get to 18 next week on SoFi?
Yeah.
Yeah.
I think.
Cool.
Yeah. I mean, like, macro can bring it there alone. And it's a company that is absolutely doing very, very well, even though the market is disrespecting it right now. So I don't think it's crazy to see it move. It's also very volatile. But the reality is we could also see 12 next week. So I hope not. I don't think that we will, but yeah.
Have you guys ever tried active day trading or very active swing trading similar to what Paper Gains does? How did it go?
I think day trading is a great way to lose money. I tried it with a very small amount, and I don't have the skill set for it. Plus, I'm not doing that full time. So swing trading, I do some swing trading. I enjoy it. I'm not exceptional at it. Usually my swing trades overall in a year produce just a little bit better than S&P 500 gains versus my long-term investing destroys swing trading, destroys the S&P 500 gains. So I know that that's my better skill set. Plus the added benefit is, like, the nature of my job and my family and different things is there's times when I can't even look at the market in a day. Swing trading, you want to be a little bit close, have stop losses and, plan things out when you take profits and everything. I prefer to be more hands off and just be like, hey, I'm buying NBIS. It's undervalued. It's going to go up. Like, when are you taking gains? I don't know. Great company, undervalued, lots of momentum. I'll buy.
Yeah. Yeah. I started off in, with day trade. Like, I started with $2,000 I put into account in August of 2017, and I was day trading biotechs and started to lose my money before I was like, you know what? Maybe I shouldn't do this anymore. Yeah, you either pay a professional or you pay the market, as the saying goes. And I paid the market for a little while, and I learned, and I didn't do that anymore. Great questions, by the way, Raven. Like 3 bangers in a row. Tom Lee started preaching Ethereum 10 months ago. Are we 10 months early on something dynamic, or are we just on a treadmill? A little bit of both.
Yeah, the price is behind where Ethereum actually is. I ended up buying BMNR again as a swing trade. It was one of those swing trades, but with a 2-year time horizon. a little bit longer than a usual swing for me, a good bit actually, just to make sure that we were able to completely digest a crypto winter. And we'll be out of it by then. I think Ethereum will be meaningfully higher. There's a lot going for it in that ecosystem. The Fusaka update was absolutely excellent. And like, even if you have concerns with quantum computing, it breaking crypto, Ethereum especially is thinking about this the right way. I'm going to do a video at some point, probably this next week, that'll update on BMNR and Ethereum and talking about that specific aspect as well, which is something that people need to be thinking about, especially as it relates to Bitcoin. I'm not selling my Bitcoin, I'm continuing to add, but there is a possible catalyst there, both for creating a lot more downturn momentum. That might be actually where we bottom in the summer, is if you start seeing a lot more headlines and more credible people coming out with that. But there's a lot of people talking about already. But I do think that a lot of the fears are overblown, especially depending on the chain. So yeah, early.
Yeah, I would tend to agree. If we do get clarity across the line, which there's positive indications of right now, which I'll talk about tomorrow, then that could mean a lot more adoption for the entire space. Pair that with macro tailwinds of the geopolitical uncertainty coming to an end, then you can have some good things for crypto. It could actually turn around in a big way very, very quickly. I mean, this is the first administration that is super pro crypto and they want to get this done. So, Raven again. Do we have an understanding why NVIDIA price action has been so muted while semis have been on fire? I think part of it is the comparables is going to be rough, but I also think the competition, like there's been this thesis around NVIDIA where they can't keep raising prices and being the sole choke point on all AI hardware. And at some point, these companies would start to create their own hardware. Like, so for example, Amazon, right? I don't think it's justified. I don't think it's a strong enough case to keep NVIDIA down. You could also argue that, hey, the stock's just taking a breather. If you look at NVIDIA, it just goes on a run and then chills for a couple of months and then goes on a run again. And so that could also, like, it doesn't go straight up nonstop all the time.
Yeah, I wanted to pull up this quote because I think it tells you what's going on. Let me make sure I'm zoomed in as far so you can actually see it. This is from GTC, Jensen Huang. And he said, well, I'll just say this. The inference inflection has arrived. Last year at this time, I said where I stood at that moment in time, we saw about 500 billion. We saw 500 billion of very high confidence demand and purchase orders from Blackwell and Rubin through 2026. I said that last year. Now, I don't know if you guys feel the same way, but 500 billion is an enormous amount of revenue. Not one impressed. I know why you're not impressed, because you all had record years. Well, I'm here to tell you that right now where I stand, a few short months after GTC DC, 1 year after GTC, right where I stand, I see through 2027 at least 1 trillion. And the answer is, if we look at estimates and then revenue, the market does not believe him. It just thinks he's a liar, I guess. I don't know. You can look at, yes, the revenue has been raised a lot and continues to be by analysts. But the bottom line is they think that the tremendous acceleration that NVIDIA has been going through is going to start tapering off. Yes, it'll continue to climb up. And so when it's looking at, let's pull up, financial, sorry. And then we'll do ratios. We'll do forward PE. Let me remove the percent change so it's cleaner. I guess I could have just searched for it. So forward valuations, we got a bunch of them. You can look at it from any angle. Price to earnings, forward price to earnings here. Wouldn't look at price to sales, forward price to free cash flow. Let's just pull up these two here. And where it's historically traded, right there. And then let's remove that. All right. It's dirt cheap. And it's almost historical. I mean, you can go further back with NVIDIA because it's been public forever. But outside of when it was, why didn't it update? Well, anyway, outside of when it was just a tiny, tiny company, and it was not growing this rate, it was not this cheap. And so the market, it just does not believe Jensen Huang. Now, I think that if this was in a bubble, just in isolation, and like you hadn't seen this meaningful acceleration in video and all these different crazy projections and things that Jensen Huang has been saying, and he just came out and he's like, hey, we're going to do $1 trillion revenue by this year. That's encapsulating multiple years. So the market might say, well, we don't believe you. We have to see it. But the proof is in the pudding. And time again, he says the craziest things that come true and in fact tend to understate the demand. This is not an Elon situation here. So the market is treating Jensen Huang like he is Elon Musk and that he is just off his rocker in terms of these projections. And I think that they're going to prove themselves true. And at that point, I think the market will have no choice but to re-rate NVIDIA. Now, there's other factors there as well. There are, of course, the hyperscalers. Many of them are beginning to spin up their own internal projects. Some are beginning to market them externally. You have Trainium and the TPUs as well as being like two of the main competitors. But yeah, the reality is NVIDIA is still positioned incredibly well. They're in the nexus of this AI arms race.
Mm-hmm. NBIS has run up so fast, I struggle not to trim. Thoughts? Nobody broke taking a profit, so go for it. Does Tevis play the London? What are you working with on the board? I do Queen's Gambit if I'm white or Sicilian if I'm black.
Not Hippo?
Sometimes if I'm playing drunk or something, I'll do the Hippo.
Yeah.
Or the Bong Cloud. That's always a classic. What will it take for crypto to catch a sustained bid? Clarity Act passing. If you have 10,000 and want to double it as quickly as possible, what would you buy? Assuming that you're okay to lose that entire 10,000, Roy.
I mean, if you're perfectly fine, you just gamble on earnings and hope that you're right. But I think that I mean, like you do you. I think that's the wrong mentality in the market. If this is like just a small, tiny bet for you, I mean, play blackjack, play predictions market, do something like that. I don't know. But otherwise, like invest it in something quality. Like it may not double overnight or over the next year, but like we talked about the hyperscalers, you can make a case for any of them, honestly, from here. $10,000 in there, it may not double next year, but in 3 years, 4 years, that's probably a double. That's a fantastic return. If time is on your side, silver, and you don't need the money, that's what I would do, is put it in something that you think is going to be quality, that will grow, that will help you sleep at night. And if you're like 25 years old and you don't need it till you're 65, even if you're just doing ETFs, and it's not wrong to do ETFs, let's say the S&P 500, that on average doubles every 7 years. It's not, it's very lumpy in the way it does. Think about how many doublings you have between where you're at now in age and when you're retiring. That $10,000 could be significant even in an S&P 500 ETF. So maybe think about doing that. I mean, Tevis, Mr. Degen, you might have a different answer.
Yeah, you take that $10,000, you put it all on red, and you pray. And that's like that's the fastest way I would double it if I didn't care about losing it.
Double or nothing.
Exactly. And it's not call options. It's not 0DT or any of this stuff. I just would go straight to the roulette table. All right. That's just me personally. I know you guys touched on this earlier, but given what we know and your thoughts on where the world is moving toward, rank the sectors you believe are best positioned to have the most upside.
I think it's hard to bet against AI right here, and there's a lot of different ways to play it. But you can play it with the hyperscalers. I don't think that's bad at all. You can look at the production chain, which Teradyne had earnings that were great this week. Air Test Systems is another one. You can look at what's happening with silicon carbide, specifically silicon photonics, actually, is what I meant to say. All those different components and component makers, I think they have a lot of value. I think one that hasn't run maybe as much is specifically energy that's tied to AI. There's been some runners, and there's some spaces within energy that have done well, but I think that that's positioned well. But anything related to in AI or related to AI, including energy, should be very much positioned well. Just pick whatever names you have the most conviction in there, and it doesn't mean pick the one that hasn't run at all, because sometimes they haven't run for a reason.
Yeah. I think if we're making a scale, you want to put everything AI related. So energy, memory, data centers, hardware, infrastructure, cloud, all the AI, sectors at the top, all the SaaS ones at the bottom, and then everything else towards the middle. I don't know how I'd rank like healthcare relative to financials relative to tech. I guess tech is near the top. I think that's going to continue to have benefits from AI, but you'll get a K shape in tech because there's a lot of tech that's just SaaS, which is gonna like this is their come to Jesus moment where it's like, hey, you adapt or die, and it's not next year, it's now. So, all right, let's see. To double 10,000, invest all in MUU 2x leveraged Micron, appropriately named margin call.
Yeah, honestly though, it's not a bad name. Like if you want to take on some risk with money you can afford to lose, Micron's not a terrible place to put it.
Yeah,
but it's not financial advice. I wouldn't do it that way.
Daniel Shaw Toy One, first time watching, like the vibe, and you're not afraid to put various ideas out there and talk. Selling calls puts a little pretty chill. Thank you so much for being here. Really appreciate that. If you do like it, then definitely subscribe to either my channel or Roy's channel. We do the show every Friday. Yeah, both ideally. And we also do another show together at the same time every Tuesday. So twice a week. Chances are we're going to be wearing the same colored shirt on both of those instances. Not planned. Serendipitous, as they say. Can we get a 4 versus Toast comparison? I think you're on the wrong channel, my brother. You're looking to go to Tanner's channel for that kind of shit.
Yeah, Toast I don't know well enough to talk about. 4 is a good company. Undervalued, but again, it's one of these sectors where, much like SoFi, it's not getting a lot of love in the market. Doesn't mean long term that's a bad investment, but the one question I'll say with 4, and I don't think this question exists with Toast, is can 4 grow durably and meaningfully without being fully reliant on mergers and acquisition? That's an unanswered question, at least in my mind.
Mm-hmm. Wow, this is interesting. Anthropic released this thread just now, and actually yesterday. Look at this, Roy. I don't know if you saw this or not, but this is kind of interesting. So they say, how do people seek guidance from Claude? We looked at 1 million conversations. So they're basically snooping on what people are saying with Claude, and they rank them into 37,000 conversations into 10 clusters. 27%, the highest, is health and wellness, interpreting test results in chronic conditions, injuries, respiratory symptoms and treatment, calories and macros for body composition. So basically, people are just giving Claude all their health data for free. Number 2, professional and career, job search and opportunity identification, career transitions, and path selection. So basically, people are displaced by Claude and they're asking Claude how they can get their jobs back. Number 3, relationships, communication in current relationships, initiating romantic interests, leaving abusive or troubled relationships. So subsidizing your therapy with Claude. And number 4, financial, debt management and repayment, home purchase and mortgage decisions, retirement and wealth planning. What do you think about this list?
Well, the one that stands out to me that's interesting is spirituality, divination, and astrological guidance. I was like, oh, people are asking it like questions about the Bible or some other religion. It's like divination and astrology.
Nah, it's like, I'm a Cancer and he's a Leo. What does this mean for us?
Give me my horoscope, but make it nice. Make it something I want.
Poor Claude just needs a cigarette after all these conversations. And just...
So like the health and wellness, like that's interesting because there was a survey that gets updated, every like 6 months. I think that was the last updated in October, which talked about AI attitudes mostly in Western countries, so including the United States. And actually, surprisingly, although it's been this way for, I think, the last 2 times that they've done this survey, the United States population as a whole is the most skeptical of AI usage over like any country in Europe, Canada, like Mexico, you name it. But the one area that is an exception is in healthcare specifically. And I've seen this firsthand. There's, I don't remember who, but there was somebody at my church that was talking about AI and that they were fascinated because they went to some specialist, they got a test, and they got it back before the doctor was calling them later, and they just fed it that information. It was like, let me know what this means, and it nailed it. And they loved it, and they're like, man, this is awesome. I've used it too with I had a nasty infection on my thumb one time, and I'm like, okay, what do I need to do here? And gave great advice as well. Like, just be careful, make sure you double check things. But yeah, that's one that I think a lot of people
look at the pushback.
Really enjoy and do trust it on. Which again, it will hallucinate. So if it's like, hey, drink bleach and you'll be fine, don't do that.
Dude, look at the pushback. Relationships and spirituality and professional career are where people pushed back assertively against Claude's responses.
I mean, if people are asking about horoscopes and stuff, and it's like, yeah.
And then sycophancy by domain, spirituality and relationships again. Oh, boy.
Interesting.
Man.
Wow.
You're wrong, Claude. He does love me. It's just, I can imagine this being a shit show, man. I know how I use Claude, but I can only imagine how other people use Claude. Yeah, it's like I said, it's subsidized therapy.
But the other one, like the religion thing, I heard this. I've not looked it up, so double check it. But I heard that the Vatican was very unhappy with certain LLM models because they seem to very much favor Protestants. So, oh, interesting. Can you pull that back up? I want to see that if you have it still.
Yeah,
I didn't catch that.
Yeah,
parenting is hard, dude. Like, it is so hard. Oh, speaking of parenting, like, this is Friday show. Today was the day when my eldest actually moved out. So we helped him move and everything. It was a great thing, great moment. That also kind of sad, but yeah, parenting. Wow.
Hold on.
The pushback.
Yeah, it's here. It's one of these threads here.
Interesting.
Yeah, far below the average, which is 15.4% pushback, which is still pretty low, honestly. Like, dude, 15% are pushing back on Claude. Like, in parenting, like less than 1 out of every 10 people are pushing back.
Do you ever push back like hard? Like, just say you're an idiot? Yeah, yes. I love doing that. AI is going to murder us when it becomes AGI.
Yeah, man, I can enjoy the superiority complex until then. I'm like, Claude, work harder.
Yeah. Like parenting though, I wonder if it's just like, it is so easy, like even for the best parents. I'm not saying like, yeah, I think I'm a good parent. I don't think I'm, the best parent in the world ever. Like but you always as a parent feel like you're kind of a failure as you're going through until the kids are out of the house or almost out of the house. And
we're finally moving to Europe, Roy, because I think that was our deal.
Yeah, maybe so. Well, the first one's out. Middle son's going out to college full time in the fall, so we'll just have the one.
Oh yeah, when the last one's out, we got to convince the wifey, and then
yep, find you a wife.
We're gonna find villas on the beach in Greece, and we can stream in person. It's gonna be a great life, dude.
That'll be good. Yeah, that's when we're full timers.
That's when we're full time. Subscribe. Oh, not a lurkers here. Subscribe and like for us to be full time doing this. And Daniel just subscribed. Congrats. One of the mods on Roy's channel can link my channel, hopefully, for Daniel to find. But all right, is there any? It's been 2 hours and a half. Let's see. Oh, we do have 2 more questions, so let's answer those, and then we'll dip out of here. How realistic is Amazon 320 year end? It's about what, 18% higher than what it is right now?
Yeah, it could happen.
Good. I think it is realistic. What would you say, 1 to 10?
I would say maybe a 30% chance of happening.
A
And
3.
the only reason, just because CapEx. It's a concern. It shouldn't be a concern. I don't know if the market will be over it by the end of the year.
I'll put it at a 6 or maybe 6.5 even. I stand by this belief that the market is going to rally towards the second half of the year. Everything's going to get dragged up. Amazon's already at 270, bro. There's no way. It's going to I'm not going to say it's going to like sustain 320, but it's going to touch 320 at some point.
There is a way, and it's called Iran.
Didn't your homeboy say to Congress today that Iran was done?
It's not the first time he said it with Iran.
Well, I mean, he's picking fights with the EU on tariffs, so I think he's done playing with his food on that one. He's moved on to other toys.
I hope so. The market seems ready to move on until the blockade is resolved and ships are meaningfully moving through there. I don't think it's done, and that's the concern. Is if it continues to be up for a long time, it really does help propel. It hurts some of the weaker economies around the world and propel inflation. The United States has hurt a lot less, but no, that's definitely present. So yeah, I'm not going. Yeah. It's Friday, but I don't want to get into defending Trump because I've shared my views on him. So yeah, and it's mixed.
What's the best consistent dividend stock for 300K?
JEPI or JEPQ, probably. If you mean consistent, yeah, high yield, pretty durable for what they do. Make sure that you like what they do. You also get monthly dividends as well. I would stay away from yield max personally. A lot of people will be like, "Man, look at this yield." But you look at the share price as well. The actual amount that you're gaining is not as much as you might be thinking. So, yeah, JEPI or JEPQ, I think.
Okay, I think that's it for our show today, everybody. We appreciate you being here, spending your Friday with us. It is 8:36 p.m. Eastern Time. We've been live for 2.5 hours, and we will be live again on Tuesday at 6 p.m. Eastern. Again, big earnings week coming up. Lots to talk about. Thank you so much for watching. Enjoy your weekends. Touch grass. Forget about the market for a little while and tune back in on Tuesday. Welcome to all the new people that joined for the first time. We really appreciate it. And that's it. Good night.